really wanted to break down the Fed, the reaction to the meeting. Positive, negative, positive, negative. Dan, what's going on? What are your thoughts?
Hello, Frank. It's not very difficult to say what's moving the markets now. Hell, it's the Fed. End of podcast. That's a wrap. Let's go have a cocktail.
See you next week.
Yeah, we were off air. So, the announcement came out, 2 o'clock? Q&A starts at 2:30. And we're hollering here between the walls here at the office. We're both sitting in the offices and listening to Powell and things. And at different times, we're like, market's going to go up on that, and it'd pop a little bit. He's in it now. And what was your trigger? And I'll tell you my trigger on it. But I did think we disagreed with it about this, or it seemed to a little bit, because I was not surprised. I thought when I was reading the language coming out, I thought, hey, the markets are probably up, and they were. Are we disagreeing on that? I think the Fed is being a little wishy-washy and back and forth, and I think that's terrible. Let me tell you that I think it's ridiculous how they act. But I do think that they're trying to play both sides of the fence on purpose, and I think that that's just terrible, and that's why you see a lot of volatility. You know what?
The statement that came out appeared to be okay, but I think people took it where they thought that it was a bullish sign, and they're going to wait and kind of see and be more data dependent and stuff like that. It won't be, you're going to see the pace slow. Obviously, right? You're going to see the pace slow. I think it's hilarious that was actually, people look at it as being bullish. I mean, we raised 75 basis points 4 times. We've never done that twice under the Fed, the modern Fed era, right? When they started, focusing on the Fed funds rate. 2 times, we've never done it. 75. We've done 4 times. So, of course, they're going to slow down the pace. But I think people think that they were going to pause. And I didn't take it that it should have been bullish and the market was going up. And it's so funny because when you watch TV, I kind of feel bad. I feel bad for individual investors. I mean, based on watching TV, what hour you put it on, you're either going to put everything into the market or you're going to sell every single thing you own, right? I mean, if you look right after the meeting, the Dow started going on, went up 200-300 points, and everybody, with Steve Leisman on, was, Steve Leisman wasn't. He was like, I'm not seeing why this is bullish or why, just by the statement before, Powell started speaking. And everyone on there was bullish. Say, this is bullish. This is great. Now we have a target of how high. And I'm like, what are you talking about? And then, of course, Powell opened his mouth. And in the very first line out of his mouth, right off the bat, our top priority, very first thing he said, our top priority is getting inflation back below 2%. Right away, you should have shorted the market because in order to do that, we have to get rates above 6% now, not 5%. So I know they're saying 5%. I don't know what they're pricing in now. It goes back and forth. And yeah, but some of the things that he said he hasn't changed. I thought he was going to change 4 months ago. And then I was like, no, holy shit, these guys are serious. They're going to go crazy. They're going to keep raising and raising and raising. He's not stopping. And for those who think he's going to stop are absolutely crazy because, and I'll tell you why, because he's not concerned, he said, about the slowdown in housing. Someone asked, what about housing? And housing is, we've seen a massive slowdown in housing, but he said, you know what? It was getting kind of overheated already. And credit is much better today than it was when we had the credit crisis. Meaning that I'm okay with housing coming down, so that's not going to stop me from raising rates. He also says, he actually said this. It's very, he used very premature to be thinking about pausing, which people were somehow hoping they would pause, even though there's no indication that inflation is really slowing with the indicators that they're looking at, especially if the manufacturing number came out, 2 days ago, 2 days ago, and then we had the jolts indicating that the job market is stronger than ever. He also said unemployment remains at a 50-year low, and he doesn't see the case for real softening in the labor market just yet. And then he said he doesn't feel like they went too far yet in terms of where rates are right now. But for him to say he doesn't see the case for real softening in the labor market yet, and very premature to be thinking about everything is telling us that he's going to raise rates, and he's going to raise rates definitely by at least 50 basis points in December. The data is not going to get better by December. I mean, the data is going to be really ugly this month, and even into next year, I think they're going to have to bring rates to 6%. He made it clear that he wants real interest rates to be positive, meaning that he wants, if you're looking at the Fed funds rate, wants to be higher than the inflation rate, and we are pretty far apart from that, which means inflation needs to come down, which we're not seeing, or he's got to continue to raise. And we're only at 4%, Daniel. And you would think, all right, we're going to be at 5%. We're just at 4% right now. It's easily going to be 5%, I think, over the majority of next year. That's not priced in. It's not priced into earnings. This was the report that I pretty much expected, to be honest with you.
The only thing I somewhat disagree with you on is the language that they put out.
You were pissed.
It drives me nuts.
You were pissed.
It's just ridiculous.
When Daniel gets pissed, I like when people get pissed when you don't see him get pissed often because it makes it that much like entertaining.
I try to be a mellow guy, Frank.
It's so you're like, this is bullish, and then they started speaking. They're like, this is the opposite of what they're saying, and it kind of was, right?
It is. It drives me insane. I mean, you have the printout. They put language in there. When the Fed does this announcement at 2, they release everything. Like you said, they release it to everybody. Hey, here's what we did. And then the Q&A starts a little bit. So, financial media, us including, we're going through everything. But the language that they added, that, in my opinion, the reason the market popped 200 or 300 points on the Dow right away was because they added language in there about next rate increases will take into consideration the previous rate hikes and the momentum it's having, the effects it's having, et cetera. That was very new, and by itself, that is a bullish statement. And that was one of the reasons we started hollering back and forth between the walls. Mm-hmm. And then, to your point, to come out and say, it's very premature to think about we're slowing down or, rates have got to go higher for longer.
Right? He said, they're not pausing. He's like,
and then to your point, to basically brush off the housing market and things of that nature.
He brushed off the housing market completely, which I was surprised at.
And again, if you want proof on why these guys have no idea what they're talking about and they're shooting from the hip, anytime, we've talked about this in the past, Frank, anytime somebody just lays it out there to say, oh, well, interest rates, they're not historically high. They're only back to the same rate they were in 2007, 2008, 2009. That's absolutely true. However, the purchasing power of the dollar that your Fed, you in charge, Jerome Powell, screw up constantly, devalue constantly on purpose, does not go near as far this time around. What?
You don't like the Fed, do you?
No, nobody should like the Fed. They're terrible. But my point is that to say interest rates are only 7% now, that's fine. But the payment is a much different. What about furnishing? What about the food and the furniture you put in your house, Frank? Is that the same price as it was in 2009?
Most economists
don't understand. That's my point. Well, they do. They either do and they choose to lie, or I just don't believe they're that dumb. I really don't. I mean, even sitting in school that long doesn't make you that dumb.
I mean, for you to be comparing this to when rates went from 8% to 20% and saying, hey, they were a lot higher, and we've seen old school guys get on and say, remember my mortgage was 20%. You were making 13-14% your savings account then too. So it was a different market then. When you go from 0 or 0.08%, that was where we were to where we are right now. I mean, at 3.25, we're up 4,300%. That's how fast. We've never seen anything like this. This is going to hit the market like a ton of bricks.